Hey investing friends, I'm Mr. Financial, and in today's video, I reveal every stock in our TFSA dividend growth portfolio, as well as the much requested industry breakdown. It's been 6 months since our last update, so let's do this! If you just landed on our channel, welcome to the moon! That's where I want our portfolio to go. Anyways, enough with the corniness. My wife and I have been sharing our dividend growth portfolio here on YouTube for a while now, but you probably noticed we haven't posted anything for 6 months. I think it was for good reason. For a little backstory on why, just over 3 years ago my wife started having some health issues. The trooper that she is, she didn't complain or stop life, but kept pushing, just kept living. Eventually it caught up to her. About a year ago she got her diagnosis and started her treatment plan. Since it's a chronic condition, it just means that sometimes she will have flare-ups where she's limited with what she can do. The past 6 months have been, you guessed it, a flare-up, hence no videos. Seeing the love of my life deal with such a debilitating condition at 33 years old has been heart-wrenching. It has also given us time to meditate on what is really important in life. We love making these YouTube videos as a side hobby. However, when she's in a bad place, we toss YouTube to the side. I think that's the reasonable thing to do. Our health is a gift we never want to take for granted. Enough of the sob story, and let's get into the update. Here's a brief look at our portfolio size as you can see in Blossom Social. As a dividend growth investor that will soon be transitioning away from my secular work, I need to protect my portfolio as much as I want to grow it. One of the ways I do this is by industry diversification. In the past, we had a lot of requests to break down our portfolio by industry. So here it is. Diversified banks make up 11.2% of our portfolio. These are banks that offer a wide range of financial services, including retail banking, corporate banking, and investment banking. Midstream oil and gas makes up the largest at 19% of our portfolio. This will drop to about 13% at complete build-out. Midstream oil and gas companies are a crucial part of the oil and gas industry's supply chain. They're responsible for the transportation, storage, and wholesale marketing of crude oil, natural gas, and other petroleum products. Regulated electric utilities make up 4.9% of our portfolio. Companies in this industry are involved in the generation, transmission, and distribution of electricity, typically operating under government regulation. Retail REITs make up 16.3% of our portfolio. Much like midstream oil and gas, this will moderate down to about 13% at full build-out. Retail real estate investment trusts primarily invest in retail properties such as shopping malls and retail centers. These can prove to be quite profitable in the right locations. Telecom services make up 9.6% of our portfolio. These are companies that provide telecommunication services, including telephone, internet, and television services. Some, of course, are more diversified than this. Life and health insurance makes up 5.1% of our portfolio. This industry offers products and services that include individual and group life and health insurance, long-term care protection, pension and annuity products and services, reinsurance, mutual funds, and institutional asset management. Independent power producers make up 14.5% of our portfolio. This will drop to about 10% at build-out. These companies generate electricity and sell it to utilities, industries, and other entities. Asset management makes up 8.7% of our portfolio. These are companies that manage investment portfolios on behalf of clients, including mutual funds, pension funds, and high net worth individuals. Consumer finance makes up a massive part of our portfolio at 0.4%. This will eventually get to 5% at build-out. Consumer finance companies play an important role in the economy by providing access to credit and financial services to individuals who may not qualify for traditional bank loans or credit cards. S&P 500 ETFs make up 0.2% of our portfolio, with our target being 5%. Exchange-traded funds, ETFs, that track the performance of the S&P 500 index, providing exposure to a diversified portfolio of large-cap US stocks. This, of course, is not an industry. Lastly, mortgage finance makes up 10% of our portfolio. These companies are involved in the origination, servicing, and securitization of mortgage loans. So with that brief overview, here's our individual holdings. Our one ETF is VFV, Vanguard's non-hedged S&P 500 Index ETF. VFV still makes up 0.2% of our portfolio 6 months later. I haven't been adding to this position in our TFSA. Next, CANEO EIT Income Fund makes up 2.2% of our portfolio. This income fund is technically in the asset management industry. Our fourth largest holding is Bank of Nova Scotia, a diversified bank. It represents 8% of our portfolio. If you have been following our portfolio, you might notice this has been dropping down the list of top holdings. Next, we have our fifth largest holding and biggest in the midstream oil and gas industry, TC Energy Corp, at 7.2% of our portfolio. Next up is our one regulated electric utilities company, FORTIS, representing 5% of our portfolio. This is positioned where we want it in our portfolio. One of two retail REITs we own, which used to be in top spot, is RIOCAN Real Estate Investment Trust. It represents 9.9% of our portfolio. This will continue to slide down the pecking order as we complete our rebuild. Next up, we have BCE INC at 4.4% of our portfolio. This is the smaller of the two in the telecom services industry. This remains bond-like in the portfolio. Guys and girls, one way to turbocharge your TFSA returns is by getting some free cash from promos like moomoo sign-up bonus. Use my link below to set up an account before April 30th and deposit just $100, and you'll get anywhere from $30 to $200 depending on your luck. You can get up to $2,400 in cash rewards, as you can see there. That's a pretty sweet return on your deposit and transfer, if you ask me. Next, we have MANULIFE Financial Corporation at 5% of our portfolio. It is our one holding in the life and health insurance industry. Our next biggest position in midstream oil and gas is ENBRIDGE. It represents 6.1% of our portfolio. Next up, TELUS Corporation, our other telecom, makes up 5.9% of our portfolio. Telecoms are out of favor and in a tough place right now, and TELUS is no exception. Next, we have PEMBINA Pipeline Corp. It represents 5.9% of our portfolio as well and is the smallest in the midstream oil and gas industry. Our largest holding in our portfolio is now Capital Power Corp. It represents 14.8% of it. I checked our last portfolio update we did in September of 2023, and it was only 8% then. You got it, we have now gone all in on this independent energy producer. Just a little sidebar here, I know it's been 6 months since our last update, and I hope you noticed the changes we made. Let us know what you think in the comments below, the good, the bad, and the ugly. Next is First National Financial in the mortgage finance industry. It represents 8.3% of our portfolio. Next up is Brookfield Corporation. It represents 3.5% of our portfolio as one of 4 asset management companies we own. If you aren't following our portfolio on Blossom, this next holding will seem new to you. MCAN Financial represents 0.5% of our portfolio as an MIC. It's technically in the mortgage finance industry. I'll be sharing my reasons for adding this position in a future video. Next up is FIERA Capital. It represents 3.2% of our portfolio as another asset manager. We will eventually exit this position. Next is our other retail REIT. SmartCentres Real Estate Investment Trust is weighted 6.3% of our portfolio. REITs, like telecoms, are in a pit the past 6 months. Next up, we have TD Bank at 3.2% of our portfolio. This is our other diversified bank we own in our TFSA. And our last holding is our one consumer finance company. goeasy Financial makes up 0.5% of our portfolio. We have a great average but failed to build out the position before it broke out. We want this at 5%. So there you have it, guys, the 18 stocks and 1 ETF we own in 10 industries. Thank you so much for watching. You guys are awesome, and we wouldn't have come back if it weren't for your support. Until next time, I'm Mr. Financial.